Halo, Dr. Hana. Kayaknya 2 kelas nanti.
Can you hear me, Miss Vita?
Yes, but you can hear me, Dr. Hana? Hello?
Okay, sorry. All right, can you hear me?
Yeah, can you hear me?
Yeah, okay now, yes.
Okay,
All
thank
right,
you.
Assalamualaikum warahmatullahi wabarakatuh to Miss Vita
Waalaikumsalam
and to
warahmatullahi
the rest
wabarakatuh.
of the students. All right, so you would like to say something, is it, Miss Vita?
Okay, maybe I want to introduce you first to my students. Okay.
All right.
Assalamualaikum warahmatullahi wabarakatuh. Good morning, Dr. Hana and all my students. It's nice to meet you in this morning. I hope you have wonderful morning this morning because this is Monday's morning. Yeah. As what I told before, this semester we're gonna have our guest lecture in management accounting subject. Yeah. And today is the first meeting with Dr. Hana Fia Hasin from UITM. So class, I hope you can focus in this meeting, listen on your camera and give your full attention to Dr. Hana. Yeah. I hope you can hear Dr. Hana's explanations and prepare some questions for Dr. Hana at the end of our meeting. Okay, I think that's enough, Dr. Hana. You can start your class with me. And Dr. Hana, you can share your PowerPoint.
All right. Thank you, Miss Vita. So before I proceed, I would like to give some explanation or a brief history about myself. Okay, I've been teaching this management accounting and financial accounting for about 26 years, right? And I've been working with UITM. Before that, I was with industry, and I've attached with a few companies before I joined UITM. Right, so my area of study mostly is on the management accounting, corporate governance. Right, so let us start the lecture for today, and I'm going to cover on the cost, volume, profit analysis today. Right, so Peter. Can you see a slide from
Yes,
your
Dr.
side?
Hana. Yes.
Is it a presenter view? The whole slide?
Yes, cost volume profit. Okay. Okay, Nazla, please turn off your microphone, Nazla.
I'm using another laptop as well, Miss Rita, right? Just to make sure that this appear
Yes,
um,
it's okay.
similar to whatever that I've presented. All right. Okay. So let us look at the learning objective today. So the first objective that we are going to complete this morning is about the variable, fixed, and mixed costs and the relevant range. Right. And the learning objective number 2, I'm not going to cover this since I guess you have learned it in other subject, if I'm not mistaken. All right, and I will proceed with the CVP income statement. A simple income statement, in fact, just to determine the contribution margin. And I have to, we are going to compute the break-even point using 3 approaches, and we determine the sales required in order for us to reach certain target of net income, and how many numbers of margin of safety that we need to keep in our company, right? So the learning objective number 1, so it is actually about the cost behavior analysis. So what we are going to look today, it is a cost behavior analysis. Just a minute, I'm having a display problem. All right, okay. The cost behavior analysis is the study of actually how the specific costs respond to changes, all right, in the level of business activities. All right, some costs change while others remain the same when activity level actually fluctuate. Fluctuate means berubah, ya. This is actually a bit important for you to understand how these overall costs behave within a business. Okay, so you might look at these some cost change, and for example, the variable cost. We are going to look at the variable cost, fixed cost, and mixed cost here. All right, so why we need this? Why we need to learn about the cost? Because it can help the management to plan the operation and to decide between alternative causes of actions. Okay, so we can apply to all type of business and entities, and where this is actually the starting point of measuring the key business activities, right? All right. Cost behavior, if we look here, is a study how specific costs respond to changes in the level of activities. Right, so I did mention earlier in the previous slide. So we look at the activity level. Okay, for example, sales dollar. All right, this is where you use sales dollar in a retail company. Let's say we have a small business in our hometown, and then we want to study the performance we base on the sales dollar, or maybe you use rupiah, and in Malaysia maybe we use ringgit Malaysia. All right, so in retail, activity level is actually often measured by sales dollars, as this I think will reflect the overall level of business activity. All right, so cost behavior analysis for a retail store might track how costs like employee wages, rent, and inventory change as dollars increase or decrease. Right? If that we use that in a retail company. However, for example, in a trucking company or transportation company, we normally use miles driven when you want to look at the cost. Okay, so for trucking company, for example, the activity level is typically what we can see here is measured in miles driven. All right. Um, based on, maybe we can say, uh, kilometer, right? Okay, so miles driven is actually kilometer driven. This is because the number of mile driven directly impact factors like for fuel consumption, right? So if you are the transportation company, normally if you want to charge your customers, all right, you will base on the numbers of kilometers, okay, because based on the fuel consumption. For example, from uh, maybe from Medan to your place. All right. Okay. So you you will consider the fuel consumption, because another thing, if you use lorry, for example, you will think that the vehicle will wear and tear, and the driver wages as well. All right. The loader driver is also quite the wages is quite costly. All right. So a cost behavior analysis for trucking company might track how these costs change as the number of mile driven increases or decreases. All right. In a hotel, for example, for room occupancy, all right. Um, Hotel use room occupancy rate to measure activity level, right? How many rooms that occupied by the customer this week or today. All right. So this is how you measure the activity level, because this actually reflects how many rooms are being used, and the cost like housekeeping, utilities, all right, amenities usage are all likely to be impacted by the occupancy rate, right? Okay. So that's why if you have a lot of visitors in your hotel, okay, so you feel happy, but however the occupancy rate, sorry, this what we call the rate of the room also is quite high, okay, because you incur housekeeping staff, utility, and so on. All right. Another example here is the dance classes taught by a dance studio. All right. So for a dance studio, activity level is measured by the number of dance classes taught. So this is because the number, I think because of the number of classes taught directly impact factors like instructor's pay, studio rental costs, and utility usage. So a cost behavior analysis for a dance studio might track how these costs change as the number of classes taught increase or decrease, right? So you need to understand this first. This is the basic, all right, the basic, where if you want to look at which activity level, so what do you focus on? All right, so you want to focus on the sales dollar, or you need to focus on the miles driven or room occupancy. All right. Okay, so by understanding how I think costs behave at different activity level, business can make a better decision about pricing, production, staffing, and other factors. Okay, you know why? Because when you want to pay your employees, for example, you need to know, because we have certain limit nowadays, we have a minimum pay, right? Okay, so that's why in order for you to set the for example, this room occupancy, the room rate for the hotel, right? Okay, you need to count everything, including the employees' pay. All right, so that's why you come out with the room rate. You cannot simply put, oh, other hotel put at 180 uh, per night, and then you also follow that price. In fact, you have to calculate first. So how you want to calculate? You have to consider all these cost behavior, right? To look at this, another what we call actually this cost behavior analysis is a technique used in managerial accounting to understand how a company cost change in response to different level of activity, as I mentioned earlier. Okay, so the activity index here is identify the activity that causes the changes in the behavior of cost, and this allow cost to be classified as variable, fixed, or mixed. Mixed means both of the costs. You have certain part of the cost is mixed and another part is variable. All right. So now, variable costs. What is actually variable cost? Kos yang berubah mengikut kadar pengeluaran, production. Alright. So, ataupun kalau kita service means sales based on our service. Alright. Okay. Kalau hotel room is a service industry. Alright. Okay. So now we look at the variable cost. Here, cost actually are expenses. Variable costs are expenses that change in proportion to the level of production or sales of a company. And these costs vary as the volume of goods or services produced or sold changes. For example, of variable costs include the cost of raw material, for example, the direct labor costs, and the sales commission. All right. So in general, the variable costs tend to increase if you produce more. All right. If your sale increase, you are going to produce more. So you need more labor to help you to produce the product, right? Okay, so that's why we normally see that the variable cost will increase proportionately based on the production, right? So the cost, actually the terms, if the cost vary in total, directly and proportionately with changes in the level of activity. All right, so for example, if we look at the example there, if the activity level increased by 10%, then the total variable cost will also increase by 10%. And if the level activity decreased by 25%, your total variable cost will also decrease by 25%. All right, so exactly this variable cost change proportionately to the level of activities in your business, right? So this means that as your business activity increase, your variable cost will increase, and if it is decreased, then variable cost also will decrease. For example, okay, let's say you run a bakery, right? You have a bakery in your hometown, and your main activity level is the number of cake you bake, right? You make cakes daily. The cost, for example, the cost of ingredient for each of the cake is a variable cost. The ingredient mean the raw material. If you bake 10 cakes, the total cost of ingredient will be 10 times the cost of ingredient for one cake, right? Okay, if you bake 20, then the total cost is for 20. Let's say the cost of raw material is $1. So if you bake one, it is going to be $1. All right, if you bake 10, then it's going to be $20. This is very simple, all right? All right. However, maybe we can look at some common example of variable costs in different industries. All right. So in manufacturing company, the raw material, direct labor, packaging, and utilities, that is considered variable costs. All right. However, in retail, okay, maybe the inventory, the sales commission, shipping costs, right? Services industry, maybe you will look at these, the variable cost is consultant fees, travel expenses, hourly wages, and the healthcare industry. Maybe you will look at these medical supplies, medication, lab tests, and so on. All right, so you have to be very clear with variable costs. All right. You need to familiar yourself with the variable costs. Should be able to differentiate which is variable cost and which is not. All right. Because once you make any mistake in your variable cost, your calculation will be wrong. Right. So familiar yourself with the variable cost and which is the fixed cost. Right. Okay. So now we look at the example here. All right. Okay. Right. Look at the example here. Diamond Company manufacture tablet computers that contain 10 ringgit camera. Right. The activity index is the number of tablet produced. Okay. So as Diamond manufactures each tablet, the total cost of camera use increased by $10. All right. So we look here. If total cost of camera will be 20,000, if Diamond produce 2,000. All right. So we look at the X. Yeah. This is your. Oh. All right. This is your table computer produced in thousand. All right. Means zero. Of course, you don't have any variable cost. All right. Let's say you produce 2,000. 2,000, if you times $10, of course, is going to be 20,000. All right. Let's say you produce 10,000, then you will incur 100,000 of variable cost. Okay, because you know that 10,000 times $10 is going to be 100,000. All right. Okay, that is the variable cost. If you look at this is the total variable cost. The graph, the line, you need to draw like this. Okay. However, when you look at the variable cost per unit, okay, it's going to be a horizontal line, right? So, because whatever level of production, the price per unit would be the same. If you produce 2,000, okay, the cost is still at 10 ringgit. If you produce 10,000, your cost still at 10 ringgit or $10. Right, so that's why you can see that the variable cost per unit is a straight line. Okay, do not miss or confuse with the variable cost. This is variable cost or total variable cost. Okay, and this one is the variable cost per unit, right? Okay, so now we can see the difference here. One is going up and this one is stagnant, all right, or horizontal line. That is about your variable cost. Okay, the most important thing if you being asked how to draw, then hopefully you can draw the total variable cost and the variable cost. But that is quite simple at your level. So maybe question will be slightly harder for you. Okay, so they normally will ask you to calculate the cost per unit or variable cost per unit or break-even point and so on. All right. So let us look at another cost here, which is fixed cost. All right, fixed costs actually refer to the expenses that remain constant and do not vary with changes. The variable is vary with changes, but fixed is not, do not vary with changes in the level of production or sale, in whatever level of production. All right, these costs are actually incurred regardless of whether the business is operating at full capacity or not. Okay, so whether you produce or you don't produce anything, you incur the fixed cost. For example, the cost of rent. Okay, we need to have a place for us to produce something. So that's why if you don't have the building, you have to rent somewhere. All right, so you have to pay to the owner of the building, right? So you rent from them. So this is without any production, you incur the cost. All right. So salaries of the permanent employee. For example, you have the manager, you have the production manager, for example. You have the engineer in your companies that monitor any problem with the machines. So they normally have the salary, whether you have the production or not. Okay? So you need to pay them when the time comes at the end of the month. So it is considered fixed unless you employ contract workers or daily wages workers. That is different. That is considered variable. All right. So that's why you need to understand this where maybe the question give you about the salary of the employees, for example. So you might ask yourself whether the workers is permanent workers or the temporary workers or contract workers, or whether they receive the wages or salaries. Okay, that there is a difference between two. All right, and maybe in property taxes. Fixed costs are actually an important aspect of financial planning and budgeting, as they need to be covered. All right, need to be covered regardless of the level of sales or the revenue generated. Okay, so as I mentioned earlier, you produce or you don't produce, you incur that cost. Okay, so to understand the fixed costs actually is very important because you're going to determine the break-even point where break-even point here you need to cover all the fixed costs that you incurred. All right, and this uh, will make you easier to what we call set the price of your product. Okay, so now we look here. Okay, fixed costs in whatever zero level production. Okay, just look at the zero level production. Let's say you have a productive facilities. The company lease productive facilities at a cost of 10,000 per month. All right, so means you are going to incur 10,000 every month without any production. All right. So at level of production of zero, you already incurred 10,000. Okay. And let's say you start to produce the product. All right. Then it's going to be lesser. All right. But it's not going the curve. The line will be like this, not going to cross X or Y. Okay, no, this look like this. You know why? Because our machine will reach at the maximum level. All right, so we will look at this relevant range later. All right, so let's say you have 10,000 per month and the total fixed cost of the facility will remain constant at every level of production. And on a per unit basis, the cost of rent will decline as activity increase. Because why? Because we share the fixed cost with the numbers of production. Let's say you produce 10,000, you are going to share that burden with that 10,000. All right. If you don't produce anything, the company have to bear that 10,000. Okay. So that's why the more, the better. All right. So that's why the company normally they want you to produce more and try to sell more in order for you to produce more. Or otherwise you are going to have an obsolete stock. All right. So that's why every department need to play their roles. All right. So that's why in the management accounting, we learn more in terms of the cost accounting, because the cost accounting will start to calculate only, but you don't make any decision. But you need that data for you to make a decision. All right. So at what level of activity that we need to produce to cover all the fixed costs and so on. All right. So the cost accountant will provide you with all the data. The data means all the fixed costs, variable costs. This is an example where it's a very simple. If you join the manufacturing company, you have a lot of example of the variable costs. All right, so a cost accountant is very tedious job. All right, and you have to be focused whether this should be included in your costing or not. All right, so it is quite challenging, but it is interesting. All right. Okay, so now we look at the total fixed costs and the fixed cost per unit. All right. So we have a horizontal line for the total fixed cost at one level of activity. We know that this is the line going to be stagnant. All right. And the fixed cost per unit will be like a curve. All right. So far, any question? What is actually variable cost here? Anyone would like to answer the question? Am I too fast?
Anyone who can answer the questions from Dr. Hannah? Variable costs are costs that, Fiona, which one, Fiona? A, B, C, or D, Fiona?
A and B, maybe, ma'am.
A
Yes.
and B?
Yeah, right. Good. Vary in
So,
total directly and proportionately with changes in the level of activities and remain the same per unit. Unit per cost per unit is still the same at any level of activity. All right. Hopefully everyone is clear now. Okay. We are going to test you later after this with the questions. So maybe more challenging. All right. So before that, let us continue on the relevant range. Okay. Relevant range is actually throughout the range of possible level of activity. A straight line relationship usually does not exist for either variable cost or fixed cost. So relationship between variable cost and changes in activity level is often curvilinear. All right. So for fixed cost, the relationship is also non-linear. Some fixed cost will not change over the entire range of activity, while other fixed costs may change. All right. This is the real example in our real life. All right. So that's why we learn about the relevant range. So we look here. This is the total variable cost. This is what we have learned earlier is like this, right? But it's not like that. You know why? Because sometimes we get commission, sorry, we got discount and so on. So that's why the cost per unit at what level, for example, at 80,000, then you will have special price. For example, you order a lot, bulk order and so on. So therefore, the supplier charge you slightly lower. So this is happen. All right, if you reach certain level of activity. When you reach 80% level of activities means you are going to order more raw material if compared to 20% of level of activity. All right. The same as the total fixed cost. All right. Sometimes the company have, let's say you produce 0 to 20% of level activities, your cost is something like this. And maybe if you produce more, then the fixed cost will increase at certain level of activity, right? So we look at the range of level activity over which a company expect to operate during a year. All right. We expect to produce here. Okay. This is the relevant range we call. We expect to have the total fixed cost somewhere around here. This is what we consider as the relevant range. Maybe we think that from 40 to 80. All right. 80% of the level of activity. All right, so the relevant range refer actually to the range of activity level where a company fixed cost and variable costs remain constant. All right, and this range is important because it helps management make decision about production level, pricing, and profitability. For example, if you want to produce 10,000 unit of product with current equipment and labor cost, so the relevant range for the company may be between 5,000 to 10,000, where the fixed costs such as rent and salary will remain constant. All right, and the variable costs such as raw material and labor costs per unit remain stable. All right, as I mentioned earlier. But let's say if the company produce less than 5,000, it may not be able to cover its fixed cost. Okay, we will calculate later. All right, it may not be able to cover its fixed cost and you may incur losses. The company may incur losses. Okay, so on the other hand, let's say you want to produce 10,000. All right, so maybe your machine cannot handle more than 8,000. So therefore, you need to invest in additional equipment, all right, or hire more employees, which will increase your fixed cost, and this definitely will touch your profitability. All right. So by understanding these relevant costs, I think the management can make a better decision about how to optimize the production level and pricing strategies to maximize the profitability. Again, about the profit and also the pricing strategy. In order for you, you need to know all these costs in order for you to put as your selling price. Okay. The relevant range, which one is more suitable? A, the range of activity in which variable cost will be curvilinear. The range of activity in which fixed costs will be curvilinear. The range over which the company expect to operate during a year, and usually from 0 to 100%. Definitely D is not an answer because you can see the relevant range stay in between 0 to 100, the purple color, right? So this is the answer, a range of activity which a company expect to operate during a year. So it is C, right? So far, any question before I proceed with mixed costs? Do you have any question?
Any questions? Class, any questions to Dr. Hannah about fixed cost, variable cost, and relevant range? Any questions so far? Is it clear? It seems to be clear, ma'am.
Hopefully. Later they will ask question, I think.
Okay.
All right. So now we look at mixed costs. I'm not sure about how for example, electricity bill in Indonesia. But in Malaysia, we have a bill that we receive every month. If you don't use anything, you still need to pay certain amount. There is a minimum amount that you need to pay. That is the fixed cost for us. And start from there, whatever amount that you use, kilowatt that you use, they're going to charge you. All right. So that is example of mixed cost, where you have the both variable and also the fixed cost. All right. So let's say 50. If you can see at the graph there, 50 is your fixed cost at the level of zero usage or level of activity. You incur $50, for example. All right. So this is your cost already. It is fixed cost. And whatever here is actually based on the miles. Whatever, let's say you increase by 1 mile, okay, then your cost will increase 50 plus 10. All right, so you can draw the graph here, maybe plus 150 or maybe plus 250. It depends on the the graph here, all right? So we can calculate. So where you have the fixed cost and your variable start at the level of $50. Okay, so that's why we call it mixed cost, where you have both variable and fixed cost, right? Okay, now let us identify which is variable, which is fixed, and mixed. All right. From my view here, I can see Riona. Can you name the variable cost here?
Okay. Leona or Fiona? Fiona?
Fiona. Sorry.
Fiona. Okay, Fiona.
Yes, ma'am. I
Can
think the
you
variable cost is direct materials,
Okay.
maintenance, direct labor,
Maintenance.
and yeah, direct materials, maintenance, and direct labor.
Okay.
Direct material, direct labor. Okay. What else? Indirect material, right? Because this is the item you use in your production, all right? Vary with the level of production. Maintenance is not vary with the level of production, all right? Because maybe maintenance, for example, a repair and maintenance costs, all right? Maybe at the level of 10,000 of production, then only you will incur, all right? How about a fixed cost? Firda, you want to try, Firda?
Okay, Firda, please. The fixed cost, Firda.
Firda, fixed cost.
I think the fixed cost is depreciation and rent.
Yeah.
Right. Okay. Depreciation and rent. All right. And we look at the mixed cost, maybe maintenance and also the utilities. Utilities is, for example, your water and electricity bill, as I mentioned earlier. All right. Maybe in I'm not so sure. In Indonesia, do we have a minimum level, Vita?
Yes, for the manual electricity, ma'am, the manual before, there's still a fixed cost and variable cost. So fixed cost is the minimum cost that should be paid every month, and the variable cost is the number of what that we use every month,
Yeah.
something like that.
Oh,
Yeah.
all
And
right.
also on phone, a
Phone.
phone for the home phone and for the office, like that. It's not a handphone or cellular phone, but phone, what we call it, phone on our house, that still use the fixed cost, the mixed cost.
Oh, it is the same like Malaysia also use that, practice that.
Yeah.
Even we
Same.
don't use.
But we still pay for that.
Okay. We got no
Okay.
choice because it is a compulsory in our life now.
Yeah.
All right. So I proceed with CVP income statement. All right. So a simple CVP income statement where we need to determine the contribution margin here. So the cost volume profit analysis actually is the study of the effect of changes in cost and volume on a company profit. Right? So it is important in profit planning. You maybe plan to have 100,000 of income or 1,000 of profit, for example. So you need to produce how many units of the product. All right. So and another thing that here is the critical factors in management decision is actually to set a selling price. I have the experience in manufacturing this Tongka Ali drink. All right. And we worked so hard at that time. If you know about this Tongka Ali Orang Kampung, If you maybe you are still young, maybe your madam think aware about it, and I think they even export to your country. All right. So we have to sit down to identify each of the costs that involved in order for us to set the selling price. All right. And to calculate the what we call product mix. Let's say you produce few products. All right, you have numbers of product in your production, okay, and you will choose the best to produce. And you also need this information in order for you to maximize the use of production facilities. All right, so we look at the basic component here. You need a volume or level of activity. You need to know the selling price. All right, you also have to calculate the variable cost, and you need to know the total fixed cost and the sales mix. All right, this is the basic component that we need to know in order for you to proceed with the CVP analysis. Right. So now you have to bear in your mind a few assumptions when we do the CVP analysis. All right. The first thing is behavior of both costs and revenue is linear throughout the relevant range of the activity index. Okay. You remember, hopefully you still remember the relevant range just now. All right. The curve is not a straight line, right? Okay, but now we have to ignore that, right? We have to base on the basic one just now, line is stagnant or straight line. Okay, costs that can be classified accurately as either variable or fixed cost. You need to identify. You cannot leave it hanging. Oh, I'm not sure this is variable or fixed. All right. We have to confirm that. Okay. And the changes in activity are the only factors that affect the cost. All right. Changes in activity. Do not consider any other factors. All right. For example, inflation. That is not our level yet. All right. Not inflation, for example. All right. Or like previous COVID-19. All right. Okay. So we have changes in the activity. Okay. We have other factors. Environmental factors would not consider in this situation. We solidly take into consideration of the activity. So if the question trick you, you have to be careful. All right. Okay. And all units produced are sold. All right. So whatever that we produce, we assume that we are going to, it should be able to be sold. All right. So when more than one type of product is sold, then the sales mix will remain constant. Right. Okay. So now, which of the following is not involved in CVP analysis?
Okay, who can answer this? Not Fiona again. Anna, can you answer this question, Anna? Which of the following is not involved in CVP analysis? Which one, Anna? Anna? Okay, Anna. Okay, how about Fadila? Fadila, can you answer the questions?
I think is C, ma'am. Fixed
C?
cost per
The
unit.
fixed cost per unit.
Yeah, fixed cost. Okay.
That's
Let us
right.
look at the basic component just now. Unit selling price, variable, total fixed cost, sales mix, and volume or level or activity. All right. Okay. Any question are not involved in CVP analysis? It is correct. Even we mentioned about the fixed cost, but this is not per unit, right? It is a total fixed cost. Okay. So thank you. Anna, is it just now?
No, Anna. Fadila, ma'am.
Fadila. Okay, thank
Fadila
you, Fadila. This is
Fariska.
right. So that's why every single word is very important. If the question mentioned about fixed cost, total fixed cost, then there is no answer here, right? But this is fixed cost per unit.
Unit.
Okay. So that's why we become an accountant, all right? Because we should be a person that have the analytical skill, all right? Okay. Now, what is CBP analysis? It is a statement for internal use. Classify costs and expenses as fixed or variable. And you report the contribution margin in the body of the statement, where what is the contribution margin? It is actually the amount of revenue remaining after deducting variable costs. All right. Report the same net income as a traditional income statement. Only here, when we do this, we are not going to separate the variable cost. We only calculate the total variable cost. All right, we look at the next example here. Very simple. Vargo Video Company produce high definition digital camcorder. All right, the relevant data for the camcorder sold by this company in June 2017 are as follows. This is selling price. This is variable cost. This is total fixed cost. And this is your sales, okay, per unit. All right, so number of sales. All right, so now you have the information. Now you have to present in the format of CVP income statement. Very simple, right? You have learned your income statement in your financial accounting, which is quite difficult. All right, you have a lot of expenses and so on. Okay, but here it's very simple. Let's say you produce 1,000 sales. You sell 1,600 unit of camcorder. All right, 1,006 times how much the selling price is now? The selling price is 500. Okay, you times 500. So you will get $800,000. All right. And your variable cost is also 1,006 time. How much is your variable cost just now? Your variable cost is 300. So time 300. Okay, so you get 480,000. So your sales minus variable cost, okay, sale minus variable cost, we call it contribution margin. All right. So now you have 320,000 of contribution margin. You don't forget about your fixed cost. The total fixed cost here is 200,000. So you minus total fixed cost, then you can obtain 120,000 of net income. Okay, I repeat. All right. This is your sale for 1,600 unit. Okay, you times 500 selling price per unit. So you get 800,000. All right. And your variable cost is 1,006 unit times 300. Then you get 480. 800 minus 480, you get 320. And the name is contribution margin. So how you obtain contribution margin? Sales minus variable cost. All right. If it per unit, then 500 minus 300. All right, in this case, we want to calculate the whole numbers of 1006. So therefore, you time 1006 times 500. All right, you minus. Then, once you get your contribution margin, you minus your fixed cost, then you will get your net income of 120,000. Right, let us look at another situation here. Okay, contribution margin is available to cover fixed costs. All right. Now, you have your contribution margin. All right. Right. Mhm. Okay. This is your contribution margin. The use is for you to cover the fixed costs and to contribute to income. All right. So formula for contribution margin per unit, as I draw earlier, selling price minus variable cost, you get contribution margin. All right. Or normally your lecturer will teach you like the selling price minus variable cost. All right. This is for single unit. It is very easy for you to remember. All right. And this contribution margin will be used to calculate or to use to cover your fixed costs. All right. So we look here. All right. So let's say we sell 1,000 Cambodia. 1,000 times 500. Sorry. Okay. 1,000 times 500 is 500,000 because 500 per unit. The variable cost is also 1,000 times 300 is 300,000. All right. 300 per unit. So now you know that you have 200,000 and you have a fixed cost of 200,000. So you don't earn any dollar. Okay, you don't earn any rupiah or any ringgit here. All right, since your contribution margin just good enough to cover your fixed costs. All right, so this is the situation where you only sell maybe about 1,000. In order for you to get more than that, then you know that you have to sell more than 1,000 units. All right. So we look at another example. Let's say you sell 1,001. Okay, then your total sale would be 500,500. All right. And the variable cost is going to be 300,000 and 300. So now you have slightly better contribution margin, 200,000 and 200. So your fixed cost is 200,000. Now you start to earn about $200 as your net income. Meaning to say that the minimum level you have to sell is 1,000. If you sell less than that, then the company will incur losses, right? So that's why we can see that this is important in order for you to make a decision. Okay, once you know the figure, now you can project. Okay, start from today, the production department and the sales department have to reach at what level of production, and the sales department need to work hard in order for them to sell more. All right. So that's why we have to work together with other department, and they have to set their strategies in order to sell more. All right. And we can produce more, and we can have better income for the company. Better income is good for us because we have a stable company, and this can allow us to get maybe bonus at the end of the year, or to ensure that we receive our salary every month. All right. It is do not see that the company normally they want a profit for them. Of course, you spend your money, you want a profit, but as an employee to the organization, we have to bear in mind a stable company will ensure our salary. Alright? Yang ni kita tak bincang, maknanya we know that God will give. Allah ada yang akan bantu kita. Itu another apa nama stage yang kita akan cerita. Alright, but in this what we call management accounting, this is how the company use the information in order for them to set the target sales, okay, target production, all right, and what they need to do. All right. So now, let's say we want to use this contribution margin ratio. Sometime in the question, they don't give you selling price, but they give you contribution margin ratio. And they give you the unit contribution margin. It depends on the question. All right. So you may use this formula. All right. Let's say unit contribution margin is 200. Your unit selling price of 500. Therefore, contribution margin ratio is 40%. All right. 200 divided into 500 times 100. Then you get that 40%. This is more on your mathematics. I think you don't have any problem with this. All right. Okay. Maybe you can try later. Okay. So let us look here. Based on the same example, 1,001 unit of camcorder just now, we receive 500,500 and the variable cost is 300. 1,300. So the contribution margin is 220. So if based on this calculation or numbers, then you start to calculate the percent of sales. Let's say 500 is your 100% of sales. Then the variable cost, if you calculate this, it is actually 60%. So your contribution margin is 40%. All right. If the question give you only this information and this information, then this can be identified. All right. This can be identified 100 minus 40 and 16, something like that. Okay. This is your modern maths. I think as an accounting student, we believe that you have a very good mathematical what we call results. So okay, now we look here. Another example. All right. So the current video current sales of 500,000, and you want to know the effect of 100,000 or 200 unit increase in sales. All right, increase in sales. Okay. So your current sales is 5. Right? With no change, let's say we calculate 500,000. Okay, this is based on the 500 ringgit per unit times 100,000. Okay, so you will get this what we call 100,000 based on 100,000. Then you will get this 500,000, your variable cost, and then your contribution margin and the fixed cost. Then you don't earn any income. All right. So now let's say you increase by 200 unit. 200 units. So now with the new figures, you have 100 plus another 1,000 unit plus another 200 unit. Okay, you times with 500, then you will have 600,000. Okay, maybe you have the calculator with you. All right, 1,002. See, 1,002 times 500. It's going to be 600. Yes, this is 1,002. 1,002 unit. Okay, times 500. And your variable cost now is also 1,002 times 300. So you have 360. Now your contribution slightly higher is 240,000. Your fixed cost is 200,000. Now you can earn 40,000 of profit, right? This is how you calculate the percentage of sales to the same. This is your contribution margin ratio as we have tried just now. Okay, so hopefully you're clear about this. Anybody want to ask any question? Am I too fast? Fadila, can you catch me?
Yes, ma'am.
Okay. About the rest, I can see Lydia, Hanifa. Hopefully, you can get something from me today. Okay, so what we have learned about the income statement, it's a very simple. We now try to identify whether our business can get net income or not. At what level that we should produce. Okay, the most important thing is contribution margin is selling price minus variable. Eh? Now you need to know and how you present it. Okay, how you can present it from here is your sales, variable cost, then you get your contribution margin if you want to prepare in the format of income statement. All right, so contribution margin minus fixed cost, then you will get your net income. Very easy. All right, okay, but the question will be difficult. Okay, example is always very simple. All right, so now, what is actually contribution margin?
Okay, we're gonna answer the questions. Okay,
Who
how
wants to
about
answer?
my main students, the male student, Arif, Fadil. Okay, Arif, what is the answer, Arif? Contribution margin is?
My son's name Arif.
Yes, Arif, my male students.
My son
Arif.
is Harif
Oh,
Hakimi.
also Arif.
He is
Okay.
doing accounting as well
Oh,
in a
okay.
final year. Final year, going to practical soon.
Okay. Arif, can you answer
Master
the
Arif.
questions? Arif Fandi Susanto.
He's
Hmm? Yes, Arif. What is the answer?
I think the answer is C, ma'am.
C? Are you sure?
Yeah.
Is it C? Contribution margin is? Okay, how about others? Rahma?
Yes, ma'am. I think it's D, both A and B above.
Okay,
A and B.
A and B above. So the answer is D, yeah, Rahma?
Yes,
Yeah,
ma'am.
it is
Okay.
true. True. Revenue remaining after deducting variable cost is true where the sales minus variable cost you call it contribution margin, and it can be expressed as contribution margin per unit if you want to calculate it as per unit, but it is not a selling price less cost of goods sold. All right, okay, never mind, Iris can try again later, right? Okay, this is an example 3. Amco Industries produce and sell cell phone operated thermostat. Okay, information regarding the cost and sale of the thermostat during September are provided below. The unit selling price of thermostat is $85. Unit variable cost $32. And the total monthly fixed cost is 190. Unit sold is 40,000. Very easy. You may try before we go to the solution. All right. So, how much is the sale value? Now you can calculate. We sold about 4,000 times 85, right? 4,000 times 85. This is also, okay, maybe we can times 4,000 here. This one also times 4,000. Okay, 4,000 times 85. So you have 340, with 340. And 4,000 times 32, 128. Okay, so 340 minus 128, you have 212 minus 190. So you have 22. Let us look at the answer. 340,000, right? I think all of you will get the same figure. All right, sales where this is actually 85 times 4,000. Right? The variable cost is how much just now?
85 times 30.
Variable cost is 32, right?
Yes.
Okay. 32 times 4,000. Right. So your contribution margin is 212 and the contribution margin per unit is 53. All right. And the fixed cost is 190. So now you earn about 22,000. Very easy, right? This is very simple. Okay. The problem is where you have to identify whether this is variable or not. This is fixed or variable cost. Okay, the factors or the item itself will make you feel more difficult. But when to prepare the income statement, I think students don't have any problem. Okay, so let us proceed with the break-even analysis. Shall we continue or we have to take a few minute breaks?
It's up to you, Dr. Hannah. Do we need
How about
a
the
break?
student? How about the student? It is flexible to me. This is another part of the lesson today. Okay. Do you think that you need a rest or we can proceed with the break-even analysis? We have covered this cost behavior, CBP analysis, and now we are going to proceed with the break-even analysis. If you think that you can follow me, then we will continue. Rama, are you in my class the previous semester?
Yes, ma'am.
See, I can still remember your name and your face. All right.
Yeah, so
You
actually,
alone or we have another student?
yeah, so actually, this international class had joined before in cost accounting, they said, ma'am. Cost
Oh,
accounting
okay.
with you, yeah? Is
Cost
it right?
accounting last semester. Is it cost accounting, Rasma? Oh, yes. So this process costing, right, Rahma? Do you
Yeah,
still
Miss.
remember how to prepare the process costing? the
Do
most
you still remember?
the most difficult chapter. All right. All right. I'm sure inshallah kalau if I go there, then I will look for Rahma. All right.
Okay, noted, Rahma.
And to the rest of the students that I've been teaching. So we have a plan to visit somewhere in September. They are going to visit PNP, Padang, Polytechnic Padang.
Polytechnic Negeri Padang, right?
So I
Yes.
maybe want to divert my direction to
Yes, don't forget to call
because I
me,
heard
ma'am.
PNP
Don't
is near
forget.
to the airport, right?
Yes, of course. I'm gonna be your personal driver here.
Inshallah.
Inshallah,
Inshallah.
don't forget to call me.
Okay,
Okay.
all right. Inshallah.
Yes,
Okay.
I also have some friends in Polytechnic Negeri Padang. Albeit yeah, some who sends you the invitations, ma'am?
I'm not so sure. We have another group that get involved with
Oh, okay, okay.
PNP.
Ifo, is
So,
it Miss Ifo, or who is it?
it's a professor one. Maybe the head of the department, I think.
Oh, okay, okay, okay. I don't know who is the head of the department now, but some of
Uh,
my friends is also teaching in Padang,
okay.
Polytechnic Negeri Padang.
But
Yeah, yeah.
they don't have accounting course there, right?
They have already. They
Oh,
have
have.
diploma, and D4, what we call it.
Oh,
Yeah, D4 and diploma, but it's not bachelor, but D4 is equal actually with bachelor. It can be equal to
oh.
bachelor degree.
All right. So I
Okay.
think I proceed with the break-even analysis. All right.
Okay.
So the break-even analysis actually is a process of finding the break-even point level of activity at which total revenue equal to total cost, where we can cover the both fixed and variable cost. So it can be computed or derived from these three techniques. All right. We can use the mathematical equation. We also can use the contribution margin, or we may use the CVP graph. And it can express in sales unit or in sales dollar. Okay, so then you have to remember this can be expressed in sales unit or sales dollar. All right, so you need to familiar yourself with mathematical equation, contribution margin, and the cost volume profit. But I think this paper not really tough if compared to another advanced paper. Advanced management accounting is more harder. All right, this is just I think it's quite interesting paper, and I love this paper actually. All right, so let us look at this mathematical equation first, right? Okay, so mathematical equation is where you have to remember this formula. All right, sales minus variable cost minus fixed cost, then this is your net income. It is actually the same. If you look at your income statement just now, sales minus variable cost, then you get contribution margin, right? But here, you don't worry about the contribution margin. You straight away minus the fixed cost and you will get net income. Okay? It is actually the same. All right. But in income statement format, after this, sales minus variable cost, you name it, contribution margin. But here, when we do the mathematical equation, we don't have to write the contribution margin. Okay. So let me erase this. Right. Okay. So now let us look at, for example, required sale. We don't know. Okay, we don't know how many to sell. Okay, now we need to identify the required sales. Okay, we don't know yet. So we have Q question in a question mark. Okay, 500 is the cost, the selling price. Okay, so that's why 500 Q minus 300. 300 is the variable cost. But the quantity we don't know yet. Okay. And we have to minus the fixed cost. Fixed cost, we know that the fixed cost is stagnant. At what level of activity we put that 200,000. All right. So now if you solve the equation, you will get this. All right. 200Q equal to 200,000. So the Q will be 200 divided into 200. So the quantity required to be sold is 1,000. Okay. Q is selling volume, selling price, variable cost, and total fixed cost. All right. So now you know that you have to sell 1,000 units. So now, contribution margin technique, very simple. We have learned earlier. Just now at the break-even point, contribution margin must equal total fixed cost. Okay, total revenue minus variable cost. Okay, just now, sales minus variable cost, you get the contribution margin. Okay, break-even point can be computed using either contribution margin unit or contribution margin ratio. These have been presented to you earlier. Okay, so another one is the contribution margin in unit. All right, so when the break-even point in unit is desired, so now you know that you need 1,000. All right, so contribution margin per unit is used in the following. We show the competition of the video. All right, so your fixed cost is 200,000. Your contribution margin per unit is 200. Then the break-even point in unit is 1,000. All right. Where do I get this? This is available in the information. All right, here. Okay. It's given to you. Okay. Contribution margin is selling price minus variable cost, which is 500 minus 300. It is 200. Okay. So when you use this is your contribution margin. This is your fixed cost. So you can know already your break-even point. Break-even, you need to sell 1,000 units in order for you to break even. All right. Okay. When the break-even point in dollar is desired, contribution margin ratio is used in the following formula. Let's say you don't have the contribution margin unit, but you have the ratio. Okay. Let's say you have the information about the ratio. Therefore, you can calculate 200,000 divided into 40%. Then you will get in terms of dollar. Right? So, which is 500,000. It is the same thing actually. All right, contribution margin ratio you get from the income statement just now, or you calculate it earlier. All right, you don't use these 200, right? Okay, but you use percentage, where ratio is supposed to be percentage. Okay. Next. Let's say we want to identify the break-even point using the graphic presentation. All right, another method of identifying the break-even point, we have to draw the line. Okay, so now we know that our fixed cost is 200,000. And let's say we produce 1,000 at 500 selling. Okay, this is the 500 selling price, and this is the quantity required just now to break even. So you draw, it's supposed to be here. All right, so this is the sales line. Okay, whatever volume that you sell lower than 1,000 is going to be here. Okay, whatever more than 1,000 is going to be your profit then. Let's say the question asks you to draw the CVP line, the break-even line. Okay, so you have to draw this. Sometimes student not familiar, so not familiar with the graphic presentation. So therefore we ask this because they normally student would like to skip this. Okay, and we test our student. All right, so you should be able to present the break-even point in the graphic presentation. The first thing, you identify the fixed cost, and then you draw the sales line, and you also draw the break-even point. Okay, so whatever sales line cross this total cost line, then you will identify the break-even in dollar. All right. Okay, let us try to answer this question. The Gosen company is planning to sell 200,000 pliers for 4 ringgit per unit. The contribution margin ratio is 25%. If Gosen will break even at this level of sale, what are the fixed costs? Okay, can anyone try?
Okay, want to try? Faiza, maybe? Faiza, do you want to try to answer the questions? Yeah, the informations about the selling price and then the number of unit sales and then the contribution margin ratio. Okay, what are the fixed costs? Okay, or anyone want to answer the questions? Or, okay, Muhammad Atta, do you want to answer the questions? Okay.
I think C.
See,
C, ma'am. Yeah.
how do you
2000.
calculate it?
How do you calculate? Yeah.
Yeah.
How do you calculate it, Atta?
Hmm.
Hmm? How to get C, Atta? How to get C? Can you explain to us how can you get C? Okay, let's answer it in Indonesia, Atta. Is it difficult in English? Okay, how about others? The same
Untuk
answer with
Gosen
Atta.
Company menjual 200.000
Hmm?
per unitnya 4. Kontribusi marginnya kan 25%. Nah, jadi yang 25% itu dikali 800.000 dari 200.000 kali 4. Jadi dapatnya 200.000 untuk total fixed cost-nya.
Okay.
Okay, 200,000 times 4, right? So that's why you get for 800,000 just now, Atta.
Yeah.
Right? And this is considered 100%. Okay, this is variable cost. Supposed to be 75% because the margin, the contribution margin is 25%. You want to present in the income statement format. Let's see, the 25% is 25% times 800,000 is 200,000. Also can. Because why? The break even at this level of sale. Okay, so the sales volume is actually 200. So when we calculate 25% from 800,000 is 200,000. So the answer is D. All right. Good, thank you. Means you are not sleeping. And I'm a bit worried. The student do not understand me. All right. So because sometimes I'm quite fast. Because I believe accounting student very good. Especially
Okay.
on this simple calculation,
Yeah.
right? So, all right, let us continue with this. All right, this is more, I think, a bit nice. Okay, so anyone want to try? Lombardi company has a unit selling price of 400. Unit selling price $400, variable cost 240, and fixed cost is 180. All right, so compute the break-even point in units, a mathematical equation here. All right, let us calculate 800Q minus 240Q, and then you will get the minus 180,000, right? Anyone want to try?
Okay. Anyone want to try?
260.
Okay, who wants to try? Okay. Fiona wants to try?
Yes, ma'am.
Okay.
The selling price is $400 minus variable cost 240 and minus 400 times 400 key minus 240 key minus fixed cost is 180,000 and net income
Yeah.
is 0. So
Okay.
I get the quantity is 1,125.
All right, okay. All right, so the sales is actually 400,000 Q minus 240 Q and minus 180. All right, okay, and income is 0. So if you calculate is 160 Q minus 180 and the Q is 1125. All right, okay. So settle with the mathematical equation, right? How about the break-even analysis here? Break-even, we know that the fixed cost is 180, right? 180. Contribution margin per unit. How do you calculate the contribution margin per unit?
Okay.
Selling price minus cost per unit. 400 minus 240. By looking at this here, selling price 400 minus variable cost. You have to memorize your what we call income statement is more simple. Set sales minus variable. Okay, selling price per unit minus variable cost per unit. So you have 400 minus 240, it should be 160.
160.
Yeah. Okay, so 180 divide into 160, you get your break-even point. It's the same thing. Yeah, 11225. All right, that is break-even analysis. And now, determine the sales required to earn target net income and determine the margin of safety. This is another section, a final section. Please bear with me. I think you're still fresh, okay? Or after this, you can go for your lunch. All right, so let us look at the target net income. Let's say we want 100,000, 200,000 of our income. So we have to determine the level of sales necessary to achieve a specified income. So how? This can be determined by using the same method. All right. Use the mathematical equation, use contribution margin technique or CVP graph. Mathematical. Quiet sale minus variable cost minus fixed cost. Okay. I think, oh, am I repeating the slide? Oh, okay. It is the same thing, right? The same technique just now. Let me see. Required sales, variable cost, fixed cost, target net income. Okay. Let's say it is not the same. Okay. So we use the same formula. All right. Mathematical equation here, required sale, variable cost, fixed cost, target net income. Let's say we target to get 120,000. We want this. All right. So we don't know how many quantity that we need to produce. So
Okay, have you stopped the share screen?
let me share again. I guess this one. Okay, now, okay. I think I have touched something. All right, okay. Now, we want to achieve this. Oh, we want to achieve this. So 120,000 of net income. And we don't know how many that we want to sell. Okay, so 500 times Q, 300 times Q, and the fixed cost is 200,000. All right, so previously we only have this 200 Q equal 200,000. But now, since we want additional of 120,000, so we have to add to our contribution margin, all right, which is 200,000 plus 120,000, and then we're supposed to sell 1,600. Okay, this is when you have target net income. All right. If not, then you will get at this level is 0. Then just now you only need to sell 1,000. But now since you want 120,000, so you need to identify how many units you want to sell. All right. It is the same, prepare the same equation. You just add the figures here. All right, if you want to use the mathematical equation. All right, let's say we want to use the contribution margin technique, where here the fixed cost plus the target net income, where this 120,000 we put it as a fixed cost as well. All right, because we want to achieve that net income. It is considered cost, a fixed cost to us. So the total cost is 320,000 divided into 200, then you get required sales in unit is 1,600 if you use contribution margin technique method. And if you use contribution margin ratio, again, you will get this required sales in dollar 800,000. Use the same one, fixed cost plus target net income 200,000 plus 120,000 divided into 40% ratio, then you will get the required sales of 800,000, right? And it is the same thing with the graphic presentation. Draw your fixed costs, okay, draw your total cost, and then your sales line when it cross the total cost, then you can identify your break-even point. Okay, that is how you draw the graphic presentation. Okay, this is when you have certain target of sales volume. All right, you want to achieve this. You inform your employee, we have to sell this in order for us to earn 100,000. In order for us to earn 500,000, it is up to you as a manager or owner of the business at what level of net income that you want to achieve. All right. Okay, so of course, as a businessman, you want certain amount of profit in your business. Right. So that is the difference between the previous one, just because of the target net income. And it normally will come out in the question. All right. Okay, so let us look at a question here. Okay, the mathematical equation, computing required sale to obtain target net income is, if you use mathematical equation, it is actually the variable cost plus target net income, variable cost, fixed cost, target net income, fixed cost and target net income, or no correct answer is given.
Okay, who wants to answer?
Let us
Rahma?
look at the
Rahma Ramadana?
mathematical.
Rahma? Can you answer the questions from Dr. Hana?
This is the mathematical equation.
So the required cell is
It is B. Variable cost plus fixed cost plus target net income. All right. Not only VC plus TNI or fixed cost and target net income. You need to have variable, fixed, and target net income. Then only you know the required sales to obtain the target net income. All right. So now another part is about margin of safety. All right, margin of safety, actually the difference between actual or expected sales and the sales at the break-even point. Okay. Expected sale or actual sales minus break-even sales. This is what we call margin of safety. All right. So it is actually measure the cushion that a particular level of sales provide, may be expressed in dollar or in ratio, and assume actual or expected sales are 750 in this example. All right. So you expect 750,000 of sales. Your break-even sales is 500,000. So you have margin of safety of $250. All right. That is the difference between actual and break-even sales. Okay. So we call it margin of safety. All right. So margin of safety ratio, let's say margin of safety is 250,000 just now. You divide into 750,000, then you get a ratio of 33%. So the higher the dollar or percentage, the greater the margin of safety, right? That is margin of safety. So let us look at the question here. Marshall Company had actual sales of 600,000 when break-even sales were 420,000. What is the break-even safe margin? What is the margin of safety ratio? Okay, let us look at the example. Ratio, let's say you want to calculate the ratio, your margin of safety in dollars. So you have to calculate the expected sale. How much is the expected sale? 600,000. Break-even sale is 420. So you have 100. No, you have 180, right? So 180, you have 180. Then 180 divide into 600. 180 divide into
3%, ma'am.
600. Yeah,
30%.
30%. Right. Thank you, Anna. All right. Okay, the margin of safety is 30%. Okay, let's try break even, margin of safety, and target net income. Zoot Suit Incorporation make travel bag that sells 56 ringgit each. For the coming year, management expect fixed costs to total 320,000 and the variable cost to be 42 ringgit per unit. Compute the following. So now let's see, we have to calculate the break-even point in dollar using contribution margin ratio. We also have to calculate the margin of safety and margin of safety ratio, assuming actual sales is 1.3824 million and the sales dollar required to earn net income of 410,000. So let us look at the first example. First part of the question. Break-even ratio. Break-even point in dollar. But how many unit? Using contribution margin ratio.
Okay.
Using
class.
contribution margin ratio. So
Break even unit in dollars, right?
margin of
Break even unit.
safety, contribution margin. If you have printed your slide, then it maybe will be easier for you to refer back. The contribution margin ratio. All right. In unit, contribution margin, you have to base on the flight number 37 or 38, something like that. All right.
Okay. Who's gonna help Dr. Hannah to answer the questions? Anna? Can you answer the questions?
To answer the break-even sales in dollars, I think the first step we have to compute the contribution margin ratio.
Okay.
Because so with the travel bags for
The selling
56,
price.
yeah,
The
the
selling
selling price
price.
is less with the variable cost.
Okay. And then you get?
And then so I get $14, ma'am.
Okay, make it in ratio. Make it in ratio.
Ratio?
Because contribution margin ratio. So it's mean that 14 divided into 56 and then times to 100.
Yeah.
Okay. The contribution margin ratio is? Tessa?
25%, ma'am.
Yeah. Repeat again, Anna.
25%, ma'am.
Yes, 25%.
25%, right.
Yeah, and then you have to compute the break-even sales in dollars.
Yeah. So the fixed cost is divided to the contribution margin ratio.
Okay. Fixed cost divided by contributions margin ratio.
All
Okay,
right.
that's good.
Okay, good. All right. And let us look at this margin of safety.
Yes, okay. The next question is about margin of safety and margin of safety ratio. Okay. Who's gonna answer this? Okay, how about others? Okay, Arif. Arif, do you want to try this one? No? Rahma, Teti, Fadila, who wants to answer this? Margin of safety. Okay. Rahma? Yes, Rahma, please.
Can I try in Bahasa, ma'am?
Oh no, Rahma. Atta is okay in Bahasa, but Rahma is no. A big no for Rahma because you are in international class, right?
Yes, ma'am. Okay, ma'am, I will try. For
Okay.
the contribution margin ratio, we
No.
can
Next, this one, Ana. Rahma, margin of safety, Ana.
okay, ma'am.
Hmm.
Sebentar, ma'am.
Yeah, margin of safety. In the previous exercise, we got the number of dollars break-even point, right? This one, break-even point, sales in dollar. Yeah, 1,280,000,000. And then you have to compute the margin of safety if the current sales is
All right, let us look at 1380, the margin of safety minus with the 1280. Is the actual sales is given 138,400. All right, you don't have to calculate. And the 1280 is given from the previous question, right? Okay, so it is actually 102 over 400, and the margin of safety again 102 400 divided into 1382 400. It is about 7.4%. It is simple, but you have to use this figure, right? I think you try to look for the unit just now, so that's why you cannot catch the how to calculate the margin of safety, since the actual sales is given to you. So this maybe the actual sales 1380 divided into 56, you can get the numbers of unit as well. But since it's given to you, you don't have to pressure yourself to do the calculation. All right, so basically maybe you can try later. Okay, so let us look at another uh, example here. Let's say compute the sales dollar required to earn net income of 410,000. So we have 320. All right, this is our fixed cost, and this become our fixed cost as well. Okay, still remember fixed cost plus target net income. Okay, and our ratio here is 25%. Where do I get the ratio? This is based on the previous slide. All right, so the required sales is 2.920. Right? So now, it's finished for today. All right.
Is it finished?
Okay.
Okay,
No
but we
worry. I
still,
think it is quite
we still
simple.
have
Yes.
some
You will
exercise,
familiar.
right?
Yes,
Yeah.
you will familiar yourself later. All right. So, um,
Okay, maybe
um,
before we move to the exercise, any questions, class, to Dr. Hannah related to cost volume profit analysis before we go more on exercise? Any questions, please?
do you have any question? If you think that it is difficult for you to speak in English, you may ask in your language. If I don't understand, then Miss Vita will explain it to me. All right. You can mix your language as well, no problem.
Okay.
Right? If I cannot get, then Miss Vita will explain. All right.
Please, any questions?
Okay. If not, then maybe we can take a break. Miss Vita.
Okay.
We take a break. Do you think about 10 minutes is enough? For then I will continue with the two question from our
Yeah.
tutorial question.
Okay, ma'am.
Uh,
Okay, let's get 10 minutes. Yeah. You can
come
take
back
your
at
drink. You can take your drink or your snack.
12:10. Okay.
Okay. Okay, but not leave the meeting. Okay. Just take your drink, take your snack, and go back to your seat. Okay, class, I think it's already 10 minutes. So please turn on your camera and Dr. Hannah will continue the explanations. Okay, please, Dr. Hannah.
Okay. All right. I think you have received my question, right? Tutorial question number 1.
Yes.
So let us go through the question first. Okay. It is about Puffler Berhad. Has been manufacturing a single product called Puff since 2015, and the manager of Puffler Berhad is keen to know the performance of Puff. He is given the following information for 2022, which is based on 50,000 production and sales unit. So the unit is 50,000. All right. The selling price for Puff is 50 ringgit. All right. So means you can identify your sales volume already. 50 times 50,000. Okay. So bear in your mind that figures. All right. And the direct cost is 2040. Means you have a few items there. Direct costs are 2040. Manufacturing overhead is 350, which out of that 350, 100,000 is the variable cost. Okay, so you have to do something with that. Okay, and the selling overhead is 220,000. All right, this include a sales commission of 5% on sales value. All right, and the general overhead are 250,000. The variable cost is 80,000. All right. Hopefully you have learned the overhead in your previous semesters. Okay, so another information here is for 2023, direct cost is expected to decrease by 150, and production and sales unit will increase by 20%. Okay, so you have to calculate the break-even point in unit and in ringgit value, margin of safety, profit or loss if the sales volume is 49,375 units, and the number of units that need to be sold if you want to have profit of 520,000. So I think the first step here, what you need to do is actually you have to do some working, right? Maybe we can see this is working one, right? Okay. We have to calculate the total variable cost now. Okay. So this is variable cost and this is fixed cost. Okay. So is the direct cost is a variable cost? Direct cost is variable cost. Direct cost. How much is the direct cost? It is 2040, but now into 2023 reduced by 150. Okay. So the variable cost now is, sorry, the direct cost now is 1890. All right. And you have another cost is manufacturing overhead. Okay, manufacturing overhead. How much? 350,000. But the variable is only 100,000. Okay. Therefore, the fixed cost, is 250,000. Just because 350 minus 100. Okay. Hopefully you can get this 250. And your variable cost is 100,000. Okay. then if 100,000, you are going to produce, your production is 50,000 and you sell 50,000 as well. So 100,000 you have to divide into 50,000. So variable manufacturing overhead is 2 ringgit.
Yeah.
Okay. So this is a bit tricky where we give you the total manufacturing overhead. So happen to be in this situation, mention 350,000, but 100,000 is variable. Okay. So you have to exclude from the fixed cost 100,000. So that's why now fixed manufacturing overhead is only 250,000. And the 100 is for variable cost. Then how you want to know is variable cost per unit? Then you take this 100,000, you divide with 50,000 unit of production. All right. So you get 2 ringgit. Okay. And then selling overhead. Selling overhead is 220,000. All right. This include a sales commission of 5% on the sales value. All right. Out of that 220,000, okay, 5% of sales value, not selling overhead. That 5% is based on sales value. How much is your sales value? I right here, 5% times
2
50,000 times 50 ringgit, right? So 50,000 unit times 50 ringgit is 2.5 million times 5%, 125,000. All right. So divide into 50,000. Your variable cost here, variable selling overhead is 250. Your fixed here is actually 95,000. How do I derive to this? Is 220 minus 125. Where do I get this 125? Come from here. Okay. 5% times 50,000 times 50 ringgit. All right. This is unit produced. This is selling price. Okay. 50 times 50,000 is 2.5 million times 5% is 125. All right. This is your fixed. Sorry, this is your variable. Okay. Then quick study, the total selling overhead is 220 minus 125. This is the fixed. And 125 divide into 50. Divide into 50, then you will get this what we call 250. Okay. So let me okay. Just a minute. All right. So I think I have to let I erase this. I repeat this. Okay. So I repeat. How do I get this 250? Actually, the first thing that you need to do is 220,000, the total selling overhead, minus 125. My working for 125,000 actually is 5% times, okay, my total sales is 2.5 million. Hopefully you can get the 2.5 million is actually 50,000 times 50. Okay. Everyone clear about this 2.5 million? It is actually unit produced or unit sold times 50 ringgit. Okay, so you get 2.5 million. And it is only 5% from this figure. Why this is given in the question? Not every time like this, all right? It is given in the question. Okay, it mentioned that 5% from the sales value is going to be your variable. Okay, so remaining is your fixed cost. 220 minus 125, you get the fixed cost. So this 125, you have to send it here. Since we want to know the variable cost per unit, all right, so that's why 125,000, I divide back to 50,000. So derive to 250. Is it correct? 125 divide into 50,000. It is 2.5. Okay, 2 ringgit 50 cent. Any question? Are you clear about this? Students, are you clear?
Bisa dimengerti? Is it clear? Can you understand?
Yes, ma'am.
Okay.
If you want to ask, you can ask me now before I proceed because I need to erase this. All right. I think you clear about this direct cost. Where do I get this? Because the information give it to me. The in 2023, the direct cost is going to decrease by 150. All right. Okay. So I have to minus from 2040. I minus 150. So I get 1890. And the manufacturing overhead is 100,000 over 50,000. Why? Because mentioned in the question, additional information, okay, out of that 350,000, okay, 100,000 is for variable. Remaining balance stay as fixed cost, okay. So this 100,000, I have to divide with 50,000 because we want to know the variable cost per unit. Okay, so 100,000 divide into 50,000. Where do I get this 50,000 at the first place? It's in the question given to you in the first paragraph based on 50,000 unit of production or sales. Okay, so that's why if you want to count per unit, the RM 100,000 divide into 50,000, then I get these 2 ringgit. Okay, and we continue on the selling overhead. Selling overhead, more information given to you. Where out of these 220,000, the sales commission is included in a 5% of sales value. All right, so I have to identify the sales value first. How much is the sales value? It is a 50,000 unit times 50 ringgit. This is my sales. Time 5%. Time 5% is going to be 125. This is variable cost. Okay. Remaining balance is your fixed cost. Okay. So hopefully now you're clear about that. Okay. If you're still not clear, maybe you can ask me later. All right. Ask me again. Okay. Let me finish this. Okay. So now this is where 220 minus 125. Okay. Then this is actually 125 125,000 divide into 50,000. So you get 2. Okay? All right. That is selling overhead. And you have another information, general overhead are 250,000. Another information is general overhead. The general overhead is variable cost is 80,000. Okay, 80,000. If you want to know per unit, then you have to divide into 50,000 again. 80,000 divide with 50,000. It is 160. Okay, 160. So here remain 160. This is actually 250 minus 80,000. Okay, this is supposed to be 95,000 and it's supposed to be 170,000. All right. Okay. Same step here, and general overhead, selling overhead, and manufacturing overhead. All right. So now you have your total. Okay. How much is the total? 1890 plus 2 plus 250 plus 160. It is 25. And your fixed cost is 250,000 plus 95,000 plus 170,000. It is 550.
15.
Okay.
Yeah.
All right. Okay. So now you already have your variable cost and fixed cost. So now we want to, let me insert the, okay. So now we have to determine the break-even. But before we want to calculate the break-even, we have to identify the contribution margin. It is up to you to choose which method you want. So, but here I'm going to use a very simple one, the selling price minus variable cost. Right? Because I already identify my variable cost per unit and I know the selling price per unit. So the selling price here is 50. The variable cost now is 25. So my contribution margin is RM 25. Since the question asks the break-even point in unit. So I have all the workings now, so I can start to answer the part 1. Break-even point in, sorry, my handwritten is not good, okay, because I use laptop here. All right, break-even point. So how you want to derive just now to break-even point? The fixed cost have to divide into contribution margin. All right, so your fixed cost is, how much is your fixed cost just now? This
How
one.
much?
515. You divide with your contribution margin. How much is your contribution margin? Is 25. So now you can get your break-even point in units. Okay, 20,000 units, 20,600 units. Okay, some students, they are very smart. They can simply answer question, in RM or in rupiah. All right, what they do, the break-even point times the selling price.
Selling
Then 20 times this one is
100,000.
1 million. Is it 1 million?
Yes, yes, 1 million and
1
30.
million. Okay. Times 50. All right. 1030. Okay. So hopefully you all can get the break-even point, same figure with me. All right. But you are going to get a wrong answer if you have made mistake in this part, right? Once you have made mistake here, then all the figures will be different. Okay. So that is where the challenging comes in. Okay, so you have to be smart in understanding the information here, right? And most of the students always make mistake here because here you don't have any problem. Once you have the fixed cost, you can divide into contribution margin, you will get your units. If you want to calculate in terms of ringgit, also can you use the same formula again. If not, then you simply take these figures times with the 50 ringgit, so you will obtain 1.03 million. All right. So now we have to identify the margin of safety. The margin of safety, the formula of margin of safety is the sale minus break-even point, right? And sales just now is 50 times 50, all right? And the break-even point is your 20,000, all right? Times, wait, maybe you can, oh, this is in unit, right?
Yeah, it's only on unit. So
In
just
unit, then
but how about this information, ma'am? For 2023, direct cost is expected to decrease by 1.5 and production and sales unit will increase by 20. Is it relevant to number 2?
yeah, it's going to affect your this sales volume. Let me erase this first. How to erase this? Okay. It's not like this. Okay. Since you want to have in unit, right? So in unit, so the sales is actually increased by 20%, right? So now our sales previously is 50,000 times, if increased by 20%, then 120%, or you may use 1.2. Correct, Ms. Vita?
Yes.
Yeah. So it's going to be?
It's going to be 60,000.
60,000, right? Okay. Minus 2,600.
Yeah.
All right. So 39,400. You don't require in RM, so just leave it like that. This is 39,400 units of margin of safety. Can you get me? Can you follow?
Hey, is it too fast? Can you understand?
Fast? Okay, I repeat again. Okay, so when come to margin of safety, you have to look at the formula again. So the formula is sales minus break-even point. Since we have the break-even point here, we have identified in one. So I will use this break-even point here. Okay, I just take that figure and I put it here. However, I have to recalculate the sales volume. Okay, why? Because as mentioned in the case, okay, the production and sales unit increased by 20%. Therefore, now it's no longer 50,000. All right, it is 1.2. It is higher by 20%. So that's why I type 1.2. Now the sales is at 60,000. Okay, so this 60,000 I minus with 20,600 of the break-even point just now. So my margin of safety is 39,400. Okay, right. And now the next question. All right, profit or loss if the sale volume is 49,375. All right. You want to get the profit at 49375 unit. Okay. So it is 49375 times 25, the break-even point. Okay, minus the fixed cost, right? Okay, this is your break-even minus fixed cost. Okay, fixed cost is 515 just now. All right. So it is 49375 times 25. 1.234375 minus 515. It is 719375. Okay, this is the profit at this level. Okay, at 49375. Okay, I simply proceed with by using the break-even point. I skip the sales, okay, minus the variable cost, okay, and if you want to do it also no problem, but we can skip it because we already know the break-even point. Ringgit, in ringgit 20. Sorry, this is not the break-even, the variable cost here. All right,
That's the
times the variable
contribution.
cost.
Yeah.
Yeah,
Is it the contribution
sorry,
margin?
the contribution margin. Yeah.
Yeah.
All right, times the 49375, and then you minus the fixed cost, you will get this 719375. All right, that is when you want to sell 49375. And what happened if you want a profit of 520,000? Okay, you aim to earn 520,000. Okay, how many units that you want to sell? Okay, so this is your target sales. Okay, so remember FC plus T targeted net income. Okay, and divide into contribution margin per unit. Okay, so the fixed cost here is 515 plus targeted net profit 520. Okay, and you divide into 25. So 515 plus 520 divide into 25. So 41,400 units need to be sold in order for you to obtain 520,000 of net income. All right. Okay, any question? All right.
Is it right, ma'am?
Yeah.
515,000.
Is it correct, my
That's
calculation? 515,000 plus 520,000. It is actually 1035.
yes.
And divide into contribution margin per unit is 25, is 4,400. You get the same amount. Why I having difficulties with the screen? Okay, having difficulties to get back to the screen. Okay, so I think this is already about 3 hours. Is almost 1 o'clock already. So I think I can only show you one of the example, right? Is it okay, Miss Vita?
Yeah, it's
Yeah,
because yeah, it seems that all of my students is already full.
okay, so
Good.
too much also no problem. Too much also no point if you cannot get the what we call information that we want to convey to you. All right. So what I can do is I will give you the what we call suggested solution for this topic, and maybe Miss Vita will look through first for the rest of the question, and she will provide you later. I have my suggested solution, but I think maybe you need to look first whether it's compatible with you or not. Okay,
Yeah.
and if it is okay, then you can blast the information to the rest of your student, Miss Vita.
Okay,
Right?
thank
Okay.
you, Dr.
I
Hannah.
think we have to proceed next week with another chapter, right? We cannot
Right.
continue with the same chapter
Okay,
when we
so
haven't finished the tutorial.
yeah, it's okay. Next week we can move to the next topic, Dr. Hannah.
Okay.
Yeah. Okay,
Do
so
you
the
have
next
more
meeting,
time for your student to do this with you?
yeah, we will arrange the time later. It's okay. They
Okay.
have a free time on Friday, right? Because Friday is free. Yeah, so I can discuss on Friday.
Okay.
Okay.
All right. So
So
I will give it to you later, the
okay.
suggested solution. If you are not clear also, maybe your student can chat with me or with you. All right.
Okay.
Then you are welcome to get back to me. No problem.
Okay, it's okay.
Okay.
Okay. Thank you, Dr. Hannah, for this meeting, and thank you for all my students for joining this meeting with Dr. Hannah, and don't forget that next week we're gonna have the second meeting with Dr. Hannah with the same schedule, right, ma'am?
On Monday, yes.
Yeah, is it still on Monday?
Inshallah, inshallah.
Yeah, inshallah, it's still the same time with today. Okay, so thank you so much, Dr. Hannah, and thank you so much all. See you again next week. Assalamualaikum warahmatullahi wabarakatuh.
I will prefer the student to ask question later.
Oh, yeah,
alright?
yeah. So,
I don't
is there
mind,
any
okay?
questions?
Because I think it is good for you to ask, just not because you have to attend my class, then you turn up and you have to open the camera and so on. So try to get the what we call clear information from me. Even you have your teaching lecturer with you, okay, you might get the chance to ask me directly. Okay, so make sure you clear about this lesson. Do not wait until the end of the semester. All right.
That's right.
So please follow up with your teaching lecturer. Okay, do not wait until week 14. Okay, so you have more things to ask. Okay, so clear something now, because this chapter is quite a simple chapter. All right, thank you for inviting and listening to me. All right, so hopefully we can see you next week. Thank you very much. Assalamualaikum.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Dr. Hannah.
Thank you, Miss Vita.
Yes.